What's up, you guys? In this video, I'm going to go over the 5 stocks that I am planning on buying in August 2020. And I'm going to be quite honest, it took me a long time to make this list because where we are with the current state of the economy, where we are with the whole Rona situation going on, there's not a lot that I think is fairly valued or even remotely undervalued. But there are a couple, and we're going to go over those in these videos. But I do want to preface that each one of these are obviously long-term investments, but they're investments that I would only plan on holding minimum 3 years, right? And we're going to go over that, exactly why. Hit the thumbs up button, subscribe to this channel, and let's get started. First stock is going to be Apple, and I'm not going to spend a lot of time giving my full bullish thesis on this company because I already did that last week. I'm going to link the video right here for you guys to watch, but I believe that if you're looking at Apple as a long-term investment, minimally with this company, 5 years, because we are at a pretty high valuation right now, this is still a phenomenal company. So market cap, $1.9 trillion, earnings per share of $13.16, PE ratio of almost 35, annual dividend of $3.28, or a 0.75% dividend. And we're at the top of our 52-week range. If we take a look at the income statement right here, we can see that obviously revenue is great. We are not growing as much with Apple as it was in the past. Actually, from 18 to 19, we saw a decrease in revenue of about $5 billion, but still pretty good income statement. Something else to look at is going to be the net income. Net income from 18 to 19 dropped. In the video I made last week, I talked about how this is not necessarily a growth stage for Apple. It's more of a transitional stage. And I think that if you're going to hold this for the next 5 years, that's not a problem. They will begin to really grow once again. Now, if we take a look at the balance sheet, you're going to see here, total assets, $338 billion, total liabilities, $248 billion, which means that even if they were to just pay off all the liabilities, pay off all the debt, they'd still have $100 billion. That's pretty insane. I truly love Apple as a company. I've talked a lot about how they're changing from a product company to more of a service-based industry. How amazing the executive teams are as Tim Cook as a leader. And I made a whole video on that, like I said, so I'm going to put that there and then we can move on to the next company. Company number 2 is going to be Gann. If you guys don't know what this company is, or if you've never heard of Gann, they are basically the back end for all of these online gambling and sports betting websites. So if you're trading something like DraftKings or FanDuel or any of these, this is the company that is most likely doing the back end for all of those companies. This is definitely a riskier company. I currently do have a position in Gann. It's not the best price, but I am continuing to build this over the next couple of years, so I don't really care what it's at right now. I decided I'd start a position because I really love this company, while it is risky, and I'm going to dollar cost average over the next couple of years. Market cap, $587 million, so it is a relatively smaller company. There is no earnings per share because the company currently doesn't make money. There is no PE ratio because the company doesn't currently make money. There obviously is no dividend, and we are trading pretty high on this 52-week range. If we take a look at the income statement, we can see that we have a good incline in revenue over the past 5 years. We can also see, taking a look at net income, that while they are losing money, you know, this honestly is a bit concerning that they doubled up their losses from 2017 to 2018. But I'm not really investing in this company because the financials are phenomenal. I'm investing in this company because of what I believe they can be in the future. Quickly, even though they are a losing company, the balance sheet, they do have $17 million in assets and they do have $8 million in liabilities. So overall, it's not the best financially stable company, but I truly believe that Gann has a huge future, not only with the whole Rona situation going on, but online sports betting has become so big in the past couple of years, right? We're at the point right now where you could actually sit on your couch, grab your phone, and bet on the last pitch of a baseball game or the last minute of a basketball game. On top of that, we can see that this is a pandemic-proof company. You can still bet and gamble online. You can still play roulette. You can still play blackjack. I see online gambling being huge in the next 5-10 years. On top of that, I don't know if Gann actually works with any esports gambling companies, but I think esports gambling is going to be huge. I just think esports in general is going to be the future. and nobody's going to stop gambling no matter how bad the economy is, unfortunately. And if you can do it from the comfort in your home, it just makes people more inclined to do that. So I love Gann. I think they have a huge future, and I am for sure going to continue to buy this company over the next couple of years. And specifically, I've been buying more and more this month. The next company is going to be Skywork Solutions. If you guys have been around me for a very long time, you know I love this company. It's one of my favorite companies ever. I sold it. I had a long-term position. I sold it about 8 months ago. I thought I sold at an amazing price. I didn't buy back in at 64. I think it was at 64, 65. I should have, but I did start a really small position in Skywork Solutions recently. Market cap, $24 billion, earnings per share of 4, a PE ratio of 32, which is not necessarily like you're not getting a steal with Skywork Solutions at this price, but it's not that bad. A good, solid dividend of 1.35% or $2 per share. We are trading a bit high on the 52-week range. I think we just hit all-time highs a couple of days ago. But for me, like I said, if I'm looking 3, 5, 7 years out, it doesn't really matter to me. This is for sure a 5G play. Skyworks is a phenomenal company. If you don't know what the company does, they actually make semiconductors. So they essentially make chips that are in your iPhones and smartphones. They're a phenomenal company, and 5G is really going to take this company to the next level. You can see here, though, on the income statement, we do have slow growth. From 18 to 19, it was a little bit of a decline. As far as net income, we can see that they are a cash flow positive company. Not that big of a growth in their net income, but there was a small decline in their revenue. What would have been terrible is if there was an increase in revenue, but the net income actually went down, because if you're making less money, you're probably going to take home less money. Total assets are going to be $4 billion, and they have $717 million in total liabilities. So phenomenal. I mean, if you're somebody who you're like myself and you grew up and you started investing off like the Benjamin Graham, Warren Buffett intelligent investor, where you need a 3-to-1 assets to liabilities, this is phenomenal. And like I said before, I talk a lot about Skywork Solutions on this channel, but they're just a phenomenal company. Balance sheet is great. Yes, they could grow a little bit more. The income statement, the revenues are not growing drastically year over year. But I think 5G is going to bring this company to the next level. I think it's a great staple to have in your portfolio. You get a little bit of exposure to semiconductors. You also get a pretty decent, solid dividend. And overall, they're just a great company. So I will for sure be buying more Skywork Solutions. Fourth company, oh man, I never thought I'd say this. The fourth company is Peloton. I was a hater of Peloton for the longest time. I thought Peloton, the company, was dumb. I don't know why anyone would ever invest in them. I thought that the actual bikes were stupid, and I'm going to get into this when I start explaining why I like this company, but let's go over some of the financials in summary right now. Market cap of $19.3 billion. There's no EPS, there's no PE ratio, there's no dividend. We're trading at the height of the 52-week range. If you look at the fundamentals, and we can check at the income statement right here, you can see that we have $219 million of revenue in 2017. They doubled their revenue in 2018. They doubled their revenue in 2019, and I would bet that they're going to more than double their revenue in 2020, potentially even triple their revenue in 2020. Now, what's important here is total net income. It went down, so they were losing $71 million in 2017, losing $48 million in 2018, lost $196 million in 2019. So it's a little concerning, because while the company did double their revenue, they basically doubled their net loss. So that's, it's not the best, but this is not a company that I'm planning to, I always say, like with investing, it's like planting a seed. I'm not going to pick this seed early. This is a company I think in the next 10 years could really, really be huge. We'll talk about that in a minute, but that is a little concerning. This is not going to be one of those perfect examples of a great investment like a Skywork Solution or something that a Warren Buffett would invest in. This is for sure really, really risky. As far as total assets versus total liabilities, $865 million in total assets. Total liabilities, $462 million. Now, Peloton, we're going to talk about this now. We talked about how I hated this company, how I really thought that Peloton bikes were just for super old, rich white people, because the only place I ever saw them was in the really rich neighborhoods, or my really rich, hip friends who would own them. And I really thought that this is just like another Bowflex or another NordiTrack or another any of those exercise equipments that come and go. And I was so wrong. Like, I was so dead wrong with this company. If you look at a chart of Peloton too, you can see that it had a huge sell-off in March. And here's the thing, right? We've seen this company, the price of the stock, I should say, not the company, but the price of the stock has gone up drastically in the past couple of months. I think this company would be a home run even before the whole Rona situation, but I think that the whole Rona situation just showed how much of a home run this company is, but sooner, because you got so many people who are obsessed with fitness, obsessed with working out, obsessed with community, right? That's a big thing. As well, you have a lot of people who can't do that. They're stuck at home because of the whole Rona situation that's going on as well. And on top of that, where I really messed up is I should have looked at this company. I should have said to myself two things. Number one, there's only 16 hours in a day, because if you're sleeping for the rest of the time, you really only have 16 full hours a day. So if you can get a platform to take over 1 hour of your life a day, that platform is worth a lot of money. So I go to the gym for 1 hour a day. Some people might go for more. Well, instead, if I was spending 1 hour a day on Peloton, on the Peloton app, or if I'm, checking my stats, or, I might be spending 1 to 2 hours a day on a Peloton app, whether it's on my bike or on my Roku, which we'll talk about that in a minute, or on my phone. That's huge. In a world of online marketing right now, that is so much. If you have 1 hour of somebody's attention every single day, that is worth so much money as well. After talking and looking at these Facebook groups and talking with people who own these Pelotons, like, they're obsessed with them. They love them. They love not only the actual bike, or they do have a treadmill now. They love the community. They love the software. They love the user interface. Like, these people are obsessed with these things, and they tell their friends, and then their friends tell their friends, and then they buy one and they share it, and then everyone competes together. Like, they've done a really, really good job. The other thing, the biggest problem that I saw with Peloton though, is that this company can't make, the money that they could make just by basically selling $2,000 bikes, $3,000 bikes, because you got to have something where everybody can afford it. And then they launched the Peloton app, which is essentially, I think it's $13 a month. It's on Roku, YouTube TV, Amazon Fire Stick, all these different things. But you spend $13 a month. There's a whole bunch of different workouts. So maybe you can't ride the Peloton bike with your friends, but you can still compete in different like ab workouts, cardio, HIIT, strength and conditioning. Like, they're phenomenal with that. They just did a big deal with Roku a couple of weeks ago where they finally put theirs onto Roku. Funny enough, I'm going to spill the beans. Roku is going to be the next company that we're going to talk about. But overall, like, Peloton, I see such a huge and bright future for this company. Am I buying it at the best price right now? No, I'm not. But do I care? No, I don't. I wanted to just start a position in this company so that I was attached to the company, because sometimes if I wait for the perfect price, it never happens. I love this company. I will probably do a whole video on Peloton, like a full bullish thesis breakdown on why I love this company so much. But for now, that is the fourth company that I'm going to be investing in this month. And the fifth is going to be Roku. We kind of talked a little bit about some of the things they're doing specifically with Peloton, but I love this company. Market cap of $18.9 billion. EPS of negative $1.50. No dividend, no PE ratio. It's trading at the top of its 52-week high. I actually bought this a couple of weeks ago, I think like $115, and it's trading all the way up at $170 a couple of days ago. Taking a look at the income statement, we can see here in revenue, $320 million in 2015, $399 million in 16, $513 in 17, $743 in 2018, and I mean, this company just keeps growing and growing and growing and growing. And Roku is basically a staple now on every single smart TV. They're a phenomenal company. The one big gripe with them, though, is that from a net income standpoint, they are still losing money. They need to get that in check. So you can see that actually in 2018, they only lost $9 million. 2019, though, they lost $60 million. So we'll see how 2020 wraps up. But that could be one big thing against the company if you're somebody who wouldn't want to invest in this. As far as assets, $1.4 billion versus $772 million in liabilities. This is another company, guys, that when I saw this company IPO, I was like, who the hell would ever buy Roku, and it was trading at like $30, and I was just like, who would ever buy this company? To me, it was just some crappy streaming TV service that made every TV a smart TV, and I didn't see the point in it. I really didn't. But this company, they basically are the staple when it comes to smart TVs, because you don't need to buy an exterior box like an Apple TV or a Fire Stick. They have their own Roku. I think it's called Roku something on demand, but basically they have their own streaming service. And then on top of that, basically every single app that is on a Fire Stick, that is on a Apple TV, is now on a Roku. I see this company having such a bright future. I'll probably make a whole bullish thesis video on this company too, but I love them. And those are the 5 companies. So Apple, Gann, Skyworks, Peloton, Roku. That's really about it. And I wouldn't even say most of those are at fair values. Honestly, I think Peloton's still a little overpriced right now. I think Roku is fairly priced. I think Skyworks is fairly overvalued. I think Gann is probably a little overvalued right now, and I think Apple is very overvalued right now. But if you're buying something for the long term, who cares? If you're here because you watch my trading videos, this is not going to be one of those for you to start, trading these. We are going to have a lot of craziness going on in the next couple of weeks. We got tensions with China. We have a deal about the stimulus package that has not come to fruition yet. We have an election. We have a potential second wave. So much going on. But these are 5 quality companies. It doesn't matter if you bought them back in March or if you buy them now. If you hold them for the next 5-10 years, you are going to have insane returns. So I hope you guys like this. Hit the like button. Comment down below which one, if any of these, are you going to buy. And subscribe to the channel, guys. Thank you very much. Enjoy your weekend. Peace.